Is that a buying opportunity, perhaps, for longer-term investors?
Yes, I would think so, because I think if you look back the development that has happened over a decade, right? Even the government policy is geared very much towards manufacturing. And U.S. corporates like Apple, they have invested significantly in India to develop an ecosystem. They have this China Plus One going from 2015, 10 years, where many U.S. corporations diversified the supply chain outside China and invested in India. So I think 25% tariff will be seen as a negative thing primarily. But again, I think one will take a view that this is over the next 3 months of 3-4 months, we'll get a deal. Tariff will perhaps come down to the average of other Asian peers. And in that context, the current decline should be a buying opportunity.
And the other factor here is services exports. Yes, they are at stake in this context, but exports as an overall contributor to Indian GDP are not as high as, let's say, Japan or South Korea. So India can afford to wait for a deal that is more favorable, yes?
That's right. The direct impact are actually manageable,
yes,
because total export to US is just 2% of GDP, right?
Yes.
And you take a 25% tariff, do some math, some sensitivity, some elasticity, probably the hit is 30-40 basis point to GDP. So on aggregate, it's not a great impact. It is manageable because India can export to other countries, and some of the policymakers have the room to give some stimulus through GST rate cuts, or maybe even RBI can cut rates given the financial stability is there. But I think what is important for India to do well and become more prosperous, wealthy, and accelerate its development over the longer term, manufacturing and exports are very important. And to that extent, we are very happy to see over the last 10 years or so, India's electronics exports, chemical export, auto part export have grown pretty well. And that has created jobs, that has created wealth in the stock market, so on and so forth. So to accelerate the development, I think a tariff which is in line with other Asian peers are required, because as we know that India competes, let's say for example electronics, the competition is Vietnam. Vietnam is 19-20%.
Yes.
25%, if that stays, then then I think Indian companies have to go the extra mile to offset that 5% impact. So I think on the manufacturing-led job creating acceleration growth, for that to happen, I think the tariffs need to come down.
Understood. So ultimately, what does this mean for the investment allocation playbook for the remainder of the year, Rana? And given the balance of risks at home, and arguably the Indian economy isn't really firing to its full potential, and abroad, given what we've discussed about the tariffs, should we be taking a more defensive stance? And if so, how would you express that?
Sure. I think that's a very important question, because if we look at India's domestic economy, right, even let's say the consumers are doing all right, but the financials is not doing well. Asset quality issues are surfacing in some places. What we expect is that going forward that there will be more policy support. I think there will be more rate cut. There's possibility of a GST rate cut, which would support the domestic economy. But I think the way we are thinking about this is look at the consumer stocks, particularly in the retail and the travel area. Look at infrastructure names, that includes real estate, power, telecom, hotels. They are doing very well. And so
consumer is holding up all right, and online shopping, tourism, hospitality, that's the best way to trade that.
That's right.
Right. Given, what about IT services? And we saw that bad news from TCS earlier this week. And that's really connected to the growth concerns in the US market, AI displacement.
Sure.
Is this an area that we just avoid for now, or are there selective opportunities there?
Sure, which was anyway what to get into next, the IT sector, right? It's a large sector in India, employs a lot of people, and thankfully services export is not under tariff discussion at all. So
yes,
that the status quo remains. There the disruptions through AI and other things. Now, I want to make a very crucial point here. If you have to look at the large IT companies who have been around for 20, 30 years, they have built their organization based on application maintenance and development. Few of them employ like 500,000, 250,000 people.
Yes.
For them to adapt to AI, productivity will take a lot of time, and they will have to go through this kind of restructuring.
Yes.
On the other hand, there are some tier 2 IT companies and they're not small, they're like $2-3 billion top line. They're pretty large by their own things. because they are smaller and more agile, more flexible, they can address this opportunity much better. And then there are American companies who are setting up GCCs in India, which is dedicated service center in India, to have their own development centers. So I think IT overall, the sector will grow. The winners will keep on changing based on who is adapting faster to the technology wave.